Let's dive into what an LLC S-Corporation looks like. We're gonna shorten out those words just a little bit and say it's an LLC S-Corp. It's easier to say and rolls off the tongue a little bit better. LLC S-Corp looks the same, acts the same as just an S-Corp. So difference is your LLC provides an extra level of state protection or state liability protection for you. So it's a good idea to have that. Let's talk a minute about what that S means in an S-Corp. So the S stands for you are filing under subchapter S of the IRS code. So it's just some specific designations of how this company can act under the IRS code. So that's where your S comes in. An S-Corp election is actually made at the IRS level. So you can set up an LLC sole proprietor, you can set up an LLC partnership, and after those points is when you would elect to become an S corporation. And so that election happens on a form 2553, election by a small business corporation. So it's a form that you file with the IRS, not with your state. And this form, it's important to know that it is due 75 days after the beginning of your tax year that you want to be an S-Corp. So if you want to be an S-Corp starting January 1, this form needs to be filed by March 15th of that year. There are ways to make a late election. We're not going to talk about that today, maybe another day, but there are ways to get around that as well. An S-Corp, there is a limitation on how many shareholders you can have under this corporation. And so you can have 1 all the way up to 100. There is a small exemption for family members. If you have that situation, then you would want to go ahead and reach out to your accountant to find out what those exemptions are for family members. But once again, as if with any other LLC or any other company, the first thing you want to do after you get your election made, you get your company set up, is you want to go ahead and get that federal ID number from the IRS. And so what you're going to do with that federal ID number is you're going to need it to file your taxes. You're going to need it to go open up that bank account. Make sure you get that separate bank account set up for your business, just this one, and then the only thing going in and out of there is your business transactions. It's going to help you out when it comes tax time, and it's going to help you out if you ever got audited. One big thing with an S corporation along the lines of that separate bank account is you do have to keep a separate book and record. So if everything's in one bank account, then you're already on the right track of doing that. With the S corporation, it also needs to have that operating agreement. It's going to designate how your company acts if you have more than one shareholder. If you want to let a shareholder buy in, how do they do that? Someone wants to get out, how does that happen? You want to close the company down. All those things are designated in an operating agreement, and you'll want to seek out an attorney to help get that set up for you. Now, let's dive into the taxes of an S-Corp, because that is actually what makes an S-Corp so appealing, is how things get taxed under an S-Corp. It helps with savings, tax savings. So let's just take a look at that. With an S-Corporation, you as the shareholder have to take what's called a reasonable wage. So what's a reasonable wage? That is a question I get asked a lot. Well, reasonable wage is what you would pay someone else to do your job. What you would pay someone else to do your job. Funny thing is there is actually no definition out there from the IRS other than a reasonable wage. And so the best way to look is just take a look and say, okay, what would I have to pay someone else to do the same exact job that I'm doing as a shareholder? And then that is what you would take as a W-2 wage. So that W-2 wage is going to be taxed just like any other employee. You're gonna have Social Security and Medicare withheld, and then the company will pay in the other half, just as a regular employee. Where your tax savings comes in is anything that a S-Corp makes over and above what you're paying yourself, whatever your net income is at the end of the day, that is not taxed for Social Security and Medicare. Whereas if you were an LLC sole proprietor, you were an LLC partnership, those things would be taxed with Social Security or with self-employment tax. S-Corp is not. So let's talk about some numbers real quick. Net income is $50,000 and you took a $50,000 paycheck in a W-2. That $50,000 paycheck is taxed with self-employment taxes. The additional $50,000 that the company made over and above that, you save 15.3% on that $50,000. So you're looking at a pretty nice tax savings when it comes to that. That is a big help when it comes to becoming an S corporation. One of the questions that we get asked sometimes is at what point do we want to become an S corporation? What point does it look good? What point does the tax savings happen? So if your company, you're like, okay, I think I'm going to make $50,000 this year, but your reasonable wage needs to be $50,000, there's not a lot of tax benefit for you to go ahead and set up that S corporation, tax-wise, based on that information. There may be other reasons you want to do it, and that you could consult with your accountant on that to see what that would be. Let's dive in. Let's take a look at how these numbers flow through a tax return. So you're gonna file an 1120S. It actually has an S at the top of it. This is where your income and expenses are gonna get reported. This form right here doesn't pay taxes. It is a flow-through entity, as a partnership is. And so once you get to the end, you get all this figured out, whatever your ownership percentage is, whether it's 100%, 50%, whatever it is, your percentage would get reported over on this K1. This K1 flows through to your 1040 return, your personal return, and that's where the tax is gonna get paid. So if you're an S-Corp and you have a W-2 and a K1 from that S-Corp, both those items go over on your personal return and they get taxed at whatever your personal tax rate would be. So let's take a note one more time. The key to being an S-Corp, you can have as many employees as you want. Shareholder has to be an employee. Just one shareholder has to be an employee. That is a keynote also. And you have the potential to have some really nice tax savings along the way with saving in that self-employment tax area.